Hello, good afternoon, everybody. We got about 9 minutes before the 2 p.m. window. So I'm gonna just kind of recap price. I didn't trade this morning or look at the market, so I'm just gonna recap or catch myself up to speed. So right now I'm looking at the dollar. I'm watching us kind of pump on the dollar. On the daily, we spent a few days in this fair value gap, and we're finally shooting right above it, also right above this volume imbalance. So we do have this tiny little fair value gap right here, but I don't believe we're gonna want to respect it. So remember, when the market moves, we move towards areas of inefficiency or to seek liquidity. So we're well above this fair value gap, and we spent some time in it. So if we're going to come down to it, we're going to look to use it as an inversion. This volume imbalance, we're way above it. So the next, and we're above this tiny inefficiency. So the next thing above is, you have this volume imbalance here, but mainly this buy side liquidity. So I am expecting the dollar to start rising and just be going up. Whereas we've also been going up on the indices. So there's a little discorrelation there. We've really just been like super range bound in the indices, but I just that's a good thing to make note of when we're like looking at the daily chart. When we're looking at the daily chart, you want to keep the daily dollar chart in mind. So we finally are starting to make some moves away from this consolidation we've been doing. We have this daily fair value gap here we're going out of. We have this daily fair value gap here we're heading out of. Let's see, there is this inefficiency right here. So with the dollar going up, I'm highlighting this one because we have that dollar pumping. So if the dollar is pumping, we should see more of an inverse on the indices, but I'm just going to highlight that so I know, just for some context. I'm going down to the 4 hour. So I am glad to see us leaving these daily inefficiencies. I'm not super happy that there's a discorrelation between the dollar and the indices. We've got a lot of upwards price action. This was for yesterday's trading. I'll take that off. Okay, so the 15-minute. Actually, I want to go to the 5. I want to kind of get an idea of what this morning did. So usually I always map out the trading session with these red lines. So there's our open. Oh, that was our opening range this morning between those two red lines. Then I map out our silver bullet range. So looks like this morning, take that off. This morning we had a news driver at 8:30. It's right here. So we came down, went up, kind of just chopped around. This is a pretty rough opening. And then at 10, we ran up, took out this high, came back down into the fair value gap, sent it a little higher into the lunch session. The price action on NASDAQ, I was looking at NASDAQ right before I hopped on, and was definitely a little more favorable. Let's look at NASDAQ. Yeah, so NASDAQ was a little more favorable in the sense that we had a tighter consolidation in the pre-market, and then we kind of poked above it, came back down, took out these lows. So I think on ES it looked like this low came down lower than this low, so that's a little bit of an SMT divergence. But then we came down, took out those lows. Yeah, so there was just a little bit more movement in NASDAQ, which is better to trade. And we came up at the end of halfway through that morning session. And I kind of like NASDAQ because NASDAQ in our lunch hour has been consolidating a little more. And I know if you saw yesterday's live stream, we used the lunch liquidity, the lunch highs, and the lunch lows to... Oh, hold on. I'm looking at my streaming window right now, and it doesn't... I don't know if my stream is keeping up to date. Some technical difficulties here. Okay. Okay, it looks like it's now streaming. Woof. Okay, so I'm sorry if that wasn't broadcasting appropriately. With the session open in 2 minutes, I'm going to have to just kind of ignore that fact. So on the NASDAQ daily, we're looking at, we just took out this swing high. So I'm paying attention to that. We took out this swing high. If we're going to go higher, the next levels I'm looking at are the consequent encroachment of this wick. Why this wick? Because it's the longest wick in this swing high. So then I did the consequent encroachment of that, this top of that swing high. I think I'm going to outline this old fair value gap. Just because that's where we are coming from. Actually, I want it to be a zone. Okay, so we're leaving that. So let's see what it wants to do. The dollar is going higher. Actually, let's look at ES as well. So ES also took that little swing high. Okay, so we got this 4 hour. We wicked above that. So I'm just being cautious of that. We did close above this swing high on the daily. And then we have the 15 minute. Okay, so 15 minute, our bellwether. We still have this lunch liquidity. Everyone was saying price. I saw on Twitter, a few people were saying that price action was kind of wonky this morning. It did seem a little wonky, so have a little lower expectations going into this afternoon session. 5 minute on NQ, breaking a low. Okay, I want to look at the dollar. Just want to make sure that we're not completely discorrelated. The dollar is going up rapidly. So it seems like we're looking at the 5 minute here, over the lunch period and like a little bit of the, not so much the morning, over the lunch period, it's like starting like a little bit before 11:30, both the dollar and the indices were going up. But sometimes if that happens and we're also on the higher time frames, like peaking above an obvious area of liquidity, so we just took that swing high on the daily, the dollar still wants to rise, and now we're getting kind of lower lows on the indices. That makes my narrative kind of think, okay, the indices wanted to come up here to take liquidity before going lower, because remember, we only move in directions for liquidity and inefficiency. So if it has to move lower, it has to take liquidity or fill inefficiency. So we did take some liquidity by taking out that swing high in the daily. Now we're sending it lower on the 5 minute. We took a lower, took out a low. There's also a low on the 15 minute. I mean, let's see what we're gonna do. I'm gonna look at the ES 5 minute real quick. Oh, I don't have one. We'll look at the ES 1 minutes real quick. So ES also didn't make that lower or take out that high, so that was the high. ICT this morning called out sorry, I'm just looking. I feel like it could go either way right here. You know, we could come down into a deeper discount and like revisit this hourly fair value gap and also take this lunch sell side. But like if it did that, it could still, that doesn't mean it's definitely going downwards, because it would still be holding this like higher time frame bullish structure. We just kind of came up so much at 10 o'clock. I would definitely say you could argue both sides right now, and anytime you could argue both sides, it definitely means the probabilities are on the lower end. I'm watching this wick. Yeah, so we immediately don't even like that. It's not even a good fair value gap. I'll keep it on there. Just it's a very large displacement on this rundown, so see if it can lend us any context. I think I'm actually liking a little higher price action, because if you see right here, when did this candle happen? 12:30. So this candle came out, took out this low, and then had this immediate rejection. immediate rejection. We have, seems like we're actually respecting it, this gap. I want to see what that looks like on the 1 minute. If we were to kind of go aggressively upwards right here, I would like longs because, you know, we're definitely closing upwards on the day, but if you look at the daily in the top left, or maybe it was the 4 hour. Yeah, it was the 4 hour. These highs, this candle came up and stopped right at the top of that one, so these are some equal highs. Right there on the 1 minute too. I mean the 1 hour calls out these equal highs even better. Yeah, so I'm not too interested in shorts right now. So this right here is kind of our dealing range. Why is it a dealing range? Because, you know, we came up, we got a swing high, a swing low, a swing high, and these are like the low, the like higher time frame low and high that will be like, we need a break to see, like if we, I'm not going to do too good a job explaining this. These are just our long-term low and our long-term high that was made after we had this large run coming out of this consolidation. And what we look for is, when we're dealing with a dealing range, we look for the discount and premium levels. So anything below 50% would be a discount in case price wants to go higher. So if we're kind of liking the idea of longs, we would like to see it come down here and see it find some kind of PD array to respect for smart money to get in at a discount to then send it higher where they can offload at a premium. So I'll kind of watch and see how we respect this wick, how we respect this hourly fair value gap. You can see on the 5 minute, we right at 12:30, twice we respected this BISI, buy side imbalance, sell side inefficiency. Couldn't even close below consequent encroachment. When did this form? What time is that? 11:50. Yeah, so I like the idea of going long. I know the past few days, we've been kind of doing some quick choppy scalps since we've been in this daily range. I'm getting a little tired of the quick choppy scalps. So I do like the idea of, and we got these like kind of equal highs on the 5 minute. We have the equal highs on the 1 hour. So I like the idea of long. I mean, we are on an up close day, so it's not a bad idea to go long. Okay, so I want to see what we do around here. I want to see if price kind of shows us that it wants to respect these levels and go higher. And then what I'll probably do is, depending on how it does it, if you can, depending on how confident you are, this isn't my style of trading. I'd like to kind of grow into it a little more, but like buying down here on the more higher time frame ideas. But what I found success with is, letting those higher time frames feed your narrative, and then you enter on the like lower. So what'll happen is we might make like a swing high, a lower swing high. So like a lower high here, come down, mess around here, then respect these higher time frame levels. Then, break structure, shift structure, make like a higher high, and then you enter on some PD array after you know it's turned. I'm going to draw out this 5-minute fair value gap. Yeah, so you can see we just wicked into it. I mean 5-minute fair value gap. No, we'll leave it at whatever it wants to be. Interesting. I guess, yeah, you could have found 10 handles. Almost. Just a little shy of 10 handles off the bottom of that fair value gap. I always measure off the bottom because, I always enter on the bottom. Like, you could measure from like the consequent encroachment, but I always enter on the bottom of these fair value gaps. I'm gonna switch over to ES real quick. Yeah, so I feel like this has been happening with ES a lot recently. I just don't like how the candles bodies have been printing. It's been printing like really brokenly. The opens and closes don't align. There's like a lot of volume imbalances. I feel like that's been happening a lot this past week. I don't really know why that's happening, but I don't like to trade it when that does happen, because it makes it so much harder to read the PD arrays. It's like they're not printing properly. Oh, you know why? Because this is still the September contract. Okay. We'll have to fix that. I've been trading NASDAQ too much. That's why. It was the September contract. Okay, so if you just joined, we're looking to go long right now. On our 5-minute, we have this fib calling out our dealing range. So if smart money wanted to send this higher, they would want to accumulate around at or below 50% of this low and high range. So they want to accumulate down here so they could at a discount, so they could sell at a premium. So we've outlined a few PD arrays at and below this 50% level to see how price respects it. So we have this large fair value gap BISI on the 5-minute that price respected twice. We saw price not close below consequent encroachment of it. We have also highlighted the consequent encroachment of this large wick. So those are two levels that I want to see how price respects. Right now, you can see price is kind of toying around inside of this 5-minute fair value gap. If we start to move heavily through this 5-minute fair value gap and don't respect the consequent encroachment of this wick, I would give up my idea of longs. But I like how this wick consequent encroachment also aligns very well with this fair value gap on the 5-minute consequent encroachment. So for upside targets, we have on the 5-minute, you can see these two equal highs, but also on the 1-minute, that 1 hour, you can see we have this equal high. And if you measured out the high of today and this equal high are almost spot on together. One thing that could lend against our narrative is, so this swing high right here is a swing high on the daily. So in theory, if smart money wanted to send this lower, like way lower back down here, it was they took this high for liquidity. That could still be in the cards just because of the dollar. If you notice, the dollar has been rising. If you look at the dollar on the daily chart, it's a very big bullish candle. And today is also a big bullish candle on the indices. So that like discoupling on the daily, when I see that, I'm gonna demand a little more at a price action when I'm looking for entries today. So that's why I said I didn't really want to just kind of do a small scalp. Like we could have scalped this for 10 handles. But I kind of want to target some, like a little bit of a larger range trade. So what I'd like to see is if we did want to send it higher up towards these highs, I'd want to see some very aggressive movement breaking these 1-minute highs, and then we could find a PD array, like a fair value gap, to enter in. But also the fact that we already spent time in this 5-minute fair value gap lends us a lot of context, because, so you can see here, we came down, respected consequent encroachment with the bodies of the candles. Then we came down again, taking any liquidity on this swing low, but then the body rejected it. So if we start to see some bodies close, especially below this swing low, then this fair value gap is probably exhausted, and we will expect lower prices. One of the reasons why I didn't want to target this lunch low is because we didn't take a lunch high. We didn't take one of the highs of lunch. So that was the lunch high. If this swing high broke above this buy side and then came lower, I would have felt a lot more comfortable going short and targeting the sell side. But since it didn't do that, I think it was leaving it for a target for later. And now I'm seeing, okay, so this is kind of what we wanted to see. I wanted to see an aggressive reaction off of these PD arrays. Let's see how price respects this. I like how on the 5-minute we're getting a very strong candle. We'll look at the 15-minute. The 15-minute is also looking good. This higher low. Okay, so what we're going to be looking for is a few more candles similar to this one to see if we can break above this high, especially if we can break above this little fair value gap, and then we'll look for an entry on the way down. I like it also because if you look at the 5-minute, there's not much in terms of inefficiency here, and on the 1-minute, price delivered very evenly on the way down. Okay, so we have a higher high taken right there. We have the fair value gap that we just entered into. I would like to see us, I'm going to wait. I want to see us get above this SIBI, sell side imbalance, buy side inefficiency first. So I want to see us close above this. Again, I'm just going to demand a little more out of price today because we do see this kind of discoupling from the dollar. So the dollar's been going up and up until about the here, and then it started going sideways, and then we finally had the drop in the indice. Okay, so that's why I wanted to wait and see us disrespect this. See what the dollar wants to do. If the dollar breaks above this high, we'll definitely send it lower. But like I said, I'm not going to be too convinced on shorts until we start closing on the bottom half of this 5-minute fair value gap. So if we get some candle closes in this lower portion of the fair value gap, then I will be convinced. This could have been it. You could have called this our silver bullet for the downside, but so now I'm watching how it reacts on this consequent encroachment of this 5-minute wick. If we completely disregard it, then I'm like, okay, we'll be going lower. But as you can see, we're already wicking. The wicks are respecting the consequent encroachment of this 5-minute fair value gap. But we already came down to it twice, so it may be burnt out. So again, we're watching this dealing range right here. So if smart money wanted to send it above these highs, it would accumulate at 50% in a discount so it could sell in a premium. So on the 15-minute, we're not getting a candle body close below this 50% line. We have about 3 minutes left in this 15-minute candle. So I'll be interested to see, does this candle body respect this? How does the next one open up? Because if the next one opens up and then we start to see some higher highs, that would lend to our upside narrative. It could also just open and come right back down. So price came up, respected this, came down, came up again, closed in this entire fair value gap. But now we're going a little lower. You can see on the dollar, printed some red candles. Okay, so coming into the close of this 15-minute candle, we came down. It's a consequent encroachment. Let's see on the 1 minute how we respect it. Even if we did enter and pick this as our silver bullet, we would have got 10 handles. We had to wait till here to get those 10 handles, and then we would have came all the way back so close to our stop loss, and this was just not the best of price delivery. Okay, so this candle body didn't want to close above the consequent encroachment. We have this coming down. Let's see how this candle body wants to close. It's also a 5-minute candle, and it's the 15-minute. Over time, this is the price action that you'll learn to want to avoid. So like sometimes you can still be like, oh, I could have got, my 5-10 handles for the day right here. But it's like you're grasping at straws. And I've been scalping so much the past few days. I kind of want to wait for what I think could be a larger run. Okay, so we got to close below this consequent encroachment. Okay, we're dropping. I'm still just going to wait this out and watch. Okay, I'm watching on the 5-minute. Normally when you see like it making really shallow lower lows, and then you have like these really aggressive up close candles, you'll be like, okay, yeah, it's turning around. But it's done that so many times that We're gonna have to wait for some really like a strong close on the 5 minute, because we still didn't get that. We thought we almost had it right here with this large wick, but then it rejected it. The dollar still going sideways. Let's see what ES is doing. ES took that low. So you have an SMT divergence right here. This was a lower low on ES. So ES took that lunge sell side. NASDAQ didn't. So that's another thing too. If we start to see, if we get above this fair value gap right here, if we get a close above that, that lends nicely towards our theory of going long, because we had the SMT couldn't make a lower low. So NASDAQ will be the stronger one to the upside if that is the case. So we have less than a minute left in this 5 minute candle. And so you want to see how price on multiple time frames respects the PD arrays. So like it's really nice when you see the 1 minute respect like a 5 minute PD array. But if we get this like small coloring outside of the lines on the 1 minute, but the 5 minutes still, so this is a 5 minute fair value gap, and we see the 5 minute respect it, that's okay. That means I don't get too mad at this coloring outside of the lines. Okay, so ES took its lunch sell side liquidity, which means that lends favorably to the idea of targeting the buy side. NASDAQ didn't, so we had a small SMT divergence. I want to see NASDAQ get a close above this fair value gap and then look for a long entry. We could even use this fair value gap as a inversion. And we're waiting. So this yellow line right here is the dollar on the 1 minute. I like to keep it in the background to make sure. So like if we are going to get above this fair value gap and close above it, then I'd want to make sure that the dollar is also kind of making lower lows. I spoke earlier today about how the dollar and the indices are a little discoupled on the daily candle. which is a reason why I am being a little more cautious today. I want to make sure like a lot of information is lining up towards my narrative. I'm going to use this red line to outline the end of the hour. Okay, so we finally got a nice up close candle on the 5-minute after all of this grossness. So I want to see some big candles breaking through this fair value gap and closing above it. The dollar right here looks like it might start going a little lower, so that's working well towards our narrative as well. Okay, so we're getting some stagnation. This is some pretty undesirable price to trade. You know, we tapped into that, and then you saw it get kind of heavy. I mean, if it did actually want to go lower, you'd want to see it continue that. But also the fact that, you know, we're having these large up close candles, but it's showing no interest to go anywhere. Okay, let's see if we want to see a large body close, large candle close above this fair value gap. The 15-minute is looking decent. 5-minute looking good. The dollar still going sideways, so we want to see the dollar start to go a little lower at the same time. Okay, we like that. Like that. Okay, so if that's going to form a fair value gap, when the next candle opens, let's see how we respect this. Consequent encroachment. I would enter there. I'd buy 2. And I would set the stop loss to right below here. So considering this an order block, set it at below mean threshold. I like how the dollar is making a lower low right here. So we finally got that 5-minute close above this body too. So we want to see it treat this as an inversion. Actually, what I'll do is I'll move my, we'll keep it there. We'll keep it there. We like that. Let's keep watching the dollar. So now that we are above this, you saw us respect it to the downside so many times. Now that we're above it, you want to see it respect it to the upside. If we close above it and then come and close below it, then price is just going haywire. It's not respecting anything. Okay, we got the close at consequent encroachment. If we get a candle body close below this fair value gap, I'll take one off the table just to mitigate some risk. But yeah, so we came down on the 1 minute, we tapped that. So considering this is an order block, we tapped the top of it. I have my stop below mean threshold. But I want to see it like tap that and still not close outside of this. We have the dollar kind of going higher right now. So keep our eye on that. Let's see how this candle body closes. Close, still inside. I think the dollar is really gonna determine our area right now. We can see ES. Wow, ES made a higher high. It seems like ES is running a little more. Kind of came well above that. Okay. So I like the look of that. I want to see us take this high. I want to see us take this high right now. If we don't take this high, that'll be concerning. Still watching the dollar. Watching the 15-minute. See the 15-minute, we came up and closed this candle right below the wick of this candle. But if we're expecting higher prices, I mean, it makes sense that we come up and kind of close there, but if we're expecting higher prices, then we want to see it go through it. The dollar, watching the dollar. Okay, I'm going to take one off the table. Let's see how this closes. What I want is I want it to react a little faster. Okay, so that's awesome. I want to see us close above that. I'm going to move this stop up there. I'm still watching the dollar. I want to see this candle body close above this high. That's awesome. And I want to see us continue. I don't want to see us really come back down. I don't want to see us, if we do come back down to this fair value gap, I want it to wick and just completely reject it. If we like start closing in here, I don't like that. I would probably, if we got some more candle bodies close in this fair value gap, I'd take one off the table. I mean, price has already been kind of wonky. That would show that it definitely doesn't want to do a clean run up to those highs. We also have the dollar kind of going up. We'll take one off right now. Oh, yep. Okay, so I have the dollar taken higher, just mitigated some risk. I definitely don't want to see it come back down and take this low. So we want to see it treat this zone as an inversion. So we still haven't closed below it, which is good. We had that wick right down to this order block. If the dollar was going lower right now, I would be a lot more confident that price was about to send it higher. But we're starting to see this kind of decoupling, which isn't the most ideal conditions. So I'm watching the 5-minute, and I'm watching the consequent encroachment of this wick. ES is looking similar. You can see this fair value gap, this bullish order block. The dollar. Just watching the dollar. On the 1 minute, we have this, it's kind of this breaker structure right here, the high, low, higher, high. Usually I don't like to pay much attention to 1 minute breaker structures. I haven't found that much consistency with them. So we are respecting this as an inversion. It's just prices being very stubborn, and it's wanting to get up there. So I want to see if this is turning into a swing high on the dollar. So if the dollar starts to come down, rolls over, that'd be favorable. I'm watching the 5 minutes, so you can see these, it's kind of, we're puttering out at the consequent encroachment of this wick right here. You're always going to find like PD arrays and reasons on each side that price is going to encounter, which is why the narrative is really important, because when choosing PD arrays, price is going to respect the ones that also are following the narrative. So if this is the actual draw on liquidity up here, then any kind of bearish PD arrays will be disrespected. We can see bullish PD arrays, so this as an inversion was being respected. It still is. It's just been really high resistance getting off of it, which in a lot of cases is not super desirable. It's just unfavorable price action. We're just gonna stick to and see if our narrative pans out. But I also don't like this rounding on the 5 minute of the candle bodies. I don't like it when that happens. You want to see like clean highs, clean lows. I'm thinking about exiting the trade just because like it might go in our direction, but I definitely have been learning to respect risk a lot more. And if we're not right immediately, it's better to not take the loss and just wait for, like, say tomorrow price action is very favorable. Okay, then we know when we're immediately right. It's really teasing. Honestly, what it's doing right now is it's doing the complete opposite to the other direction of what it did down here. It was like teasing shorts, teasing shorts, teasing shorts, teasing shorts, and you eventually got what you wanted if you were to hold on for that long. And this whipsawing. I was liking longs because I was like, okay, they're whipsawing shorts to the bottom, so when we close above this fair value gap, use it as an inversion, it will deliver more cleanly, and that seems not to be the case, which is really annoying because it makes us wait. Okay, so I'm going to move this up. So the low-hanging fruit is 10 handles, which is right here, right there. I do believe, though, if we get there, I think we want to see these highs up top. I'm gonna move this right above break even. So we want to see the down close candles, respecting price to the upside. So if you can see, although it's really choppy and really disgusting, that was the case here. We have these 3 down close. We came up, down close. We never closed below these. Same here. We came up above these, down closed. Never really closed below them. So 30 ticks. Let's just close that out. Okay. So there was 10 handles right there. It might go for that buy side. I'm not too interested in the price anymore. If the dollar starts to roll, we start to drop on the dollar, we could definitely see it. Watch a little longer. There we go. Right after we got out. Okay, so see the dollar making this lower low, going up. Okay, yeah, I like this liquidity a lot now because we don't have much in terms of inefficiencies above between here and that green line to the left side of the chart. So I suppose you can call this our silver bullet for the day, which delivered 10 handles to both sides. I will show the account. I was trying really hard not to look. Small win. So that was when we took that one off the table just to mitigate risk because price was looking kind of gross. And then this was our 10 handles. I think it came out to be a 9 just because I market ordered out. So green on the day. Price is looking better now. But this was still just some rough price action. Rough. So as you can see, like the candle, the 1 minute candle immediately after I took that profit just shot up, and it is hard to not feel kind of the FOMO of like, oh, it went up right after I exited. But something that comes over time is like there's going to be so many trades where you'll be able to get that, and it's more of like, I'm really happy that I was loss averse today, and it was definitely a good day to be like risk averse. If you just like look at the way price was delivering, it was pretty high resistance. Yeah, so we're definitely going for these highs. I'm interested to see how far it goes after this high. So if we look at the, that is the one. Let's look at the 4 hour. So I feel like after this high, there's not much left. Like the next objective would be really high, and if it was to really actually get up here to this consequent encroachment, that'd be a lot of movement. I'm not saying it can't happen, but let's see. Okay. So what I'll be looking for tomorrow, what I'm excited for is using the ICTs. Thank God it's Friday. So what we'll do is we'll take the weekly candle, and the plan is what TGIF is on the weekly candles. Usually you'll see a retracement of, I think it's 20 to 30%. So if you notice, there's always a candle high and then the body closes lower. And oftentimes that weekly candle, it will, after especially large run days, it will fall within 20%, 20 to 30%. I guess I'll clean this up a little. That's so this was 1 week where that played out nicely. So we made the high on that Friday, and then we shorted down to the 20 to 30% range, and that's where the body closed. So that's like a nice target. It's a very good Friday narrative to play, so we'll probably play that tomorrow. We'll at least see. this weekly candle actually isn't shaping up to be that big, but we could see tomorrow, especially since we've left this daily fair value gap. Since we're kind of leaving this consolidation, it might want to shoot up, take out these, shoot up to this zone, and that will get us a pretty large candle on the weekly, and then you'll see the 20%, 30% retracement back into the range. So going over this afternoon trade, the narrative was we wanted to see these higher highs taken out, and we wanted to see smart money accumulate at a discount below this 50% mark, and then they would sell at a premium up here. When we were looking at the 5-minute, we mapped out some discount PD arrays that would, to see how, if price tipped its hat. So we highlighted this 5-minute fair value gap right here. You could see price respect it twice. We highlighted the consequent encroachment of this wick. And I guess on the 5-minute is what really told the story. We came back down into this 5-minute fair value gap, and the bodies couldn't close below consequent encroachment of the fair value gap or consequent encroachment of the wick. And it's awesome when you see those things line up. On the 1-minute, that looked like a shit show. We highlighted this fair value gap on the 1-minute because we saw going into the 2 p.m. session, it was the first candle with a decent amount of displacement. We saw price respect it once, twice, 3 times. So the narrative was, if smart money is accumulating at a discount between this dealing range, so this low, this high, they're accumulating at 50%. When we get above this fair value gap, since we already saw it respect it to the downside, we'd want to see it respect it as an inversion to the upside, which it did. It looked like a high resistance run, which is why you saw me kind of try and mitigate risk. But the narrative ended up playing out. So the key was, once we closed above this fair value gap, to make sure that price respected it as an inversion. So that means no candle bodies closed. I originally set my stop below 50% of this down close candle to treat it as an order block. As you can see, price right here came right down and touched the top of it. The low of this candle was 15,674. The high of this candle was 15,674.25. So this came 1 tick below. Just 1 tick's enough to trigger orders. Came back up, closed above this high. We respected, came back down, but didn't get a body to close below consequent encroachment, and then we just kind of rolled higher. I think I was definitely way more defensive on this trade than in hindsight I should have been. But the reason I was a lot more defensive on this trade was because the dollar is just kind of going sideways. The dollar's going up today. Today's also an up day on the indices, so we didn't have that perfect concert happening between the dollar and the indices. And the trade worked out for us today, but that's a really big red flag, and there's going to be days where you're going to see that happening, and what's going to happen is we might make that high, and then it's going to come down and it's going to close, and then say my stop's still down here, it's just going to run right through it, or it's just going to run right to it. And that's because you didn't respect the warning sign of the dollar, the decoupling of the dollar and the indices. The indices can move if the dollar is just going sideways. So it's not like for every tick up the indices move, the dollar should go a tick down. And a lot of times the indices will move sideways, waiting for the dollar to break a higher, like a larger structure. But sometimes the dollar will just move sideways, and then the indice can run on its own to liquidity, which is what it did today. And it worked in our favor. But again, I just want to highlight, the defensiveness is definitely warranted when you see this decoupling of the dollar and the indices. And now the dollar's dropping. So if the dollar comes and takes out this low right here, I could see us sending it a little more to the upside. We already took this liquidity on the daily. I'm not too interested in taking another trade just because I wouldn't be shocked if we saw ES and NASDAQ, that's like they've been going up all day and the dollar's been going up all day, and they just wait until, say, like this 315 macro and the dollar, decides to make a higher high, and then you see just like a plummet that could happen. Yeah, so again, mitigating risk today, just locking in a small win so we could live to see another day. And then what's going to happen is on another day when the dollar and the indices are working together in a better concert, you might enter on the inversion of this fair value gap, and then it just sends it straight to the buy side, instead of just having this rolling. And it's really just making sure you mitigate your losses until those days happen. And then those days are the ones that really carry your account up to new highs. So it's kind of, I spoke about this yesterday, but what I've learned is trading is really just making sure on when you lose, or like you're not definitely on sides, just making sure that you limit your loss as much as possible. So when you do have the days where everything lines up perfectly, that base hit will turn into a home run. But I appreciate you guys for watching these videos as of late. Again, like I said, once we get the account balance, once we start to grow the account balance a little more, we'll start to take on some more risk and play a little more aggressively. This is the account history. So as you can see, today's the 14th. These trades were the only trades I took today. Here's this page if you'd like to look at this page. I never spend any time on this page. But yeah, so as we start to get this equity curve a little higher, we'll start to play a little more aggressive. Remember, I'm using 150 as a paper trading balance just to kind of simulate the prop firm values, but I think ICT spoke on this, and I think it's pretty critical to understand that if you are interested in prop firms and they give you an $150,000 account, you don't have $150,000 of equity. You have whatever your minimum loss is. So you might look at this and say, these are small trades. But what happens is, if I think it's like 2,000 or 2,500 is like your bottom line, where if like you cross below that, you'll get kicked out. Like you'll just lose the challenge. You have to view that as a $2,000, $3,000 account. So it's not really an $150,000 account. You have a $2,000/$3,000 account. And if you have a $2,000/$3,000 account, you're gonna want to expect wins and losses that are this size. So I could get on here, and especially because it's paper trading, like I could get on here and sling 5, 10, 15 contracts And especially today, like I took some off to mitigate risk, but I could have like put 5 contracts on and then, or could have put like 15 and then be like, oh, I'm going to take 5 off and then like just wait and like do something. And then like it runs with 5 and I like ran up the account balance. But don't expect to see like a P&L of like 2K, 3K, because like I said, in theory, if you are trading a $2,000 to $3,000 account, you're not going to see profits of $2,000, $3,000. You're not going to be making and placing trades that are like a 100% gain, like 100% in your account daily. That's not how it works. Like they're going to be realistically this size. And I'm using the paper trading, to kind of show my plan is to run this account up to 150, not 160. So like whatever would be passing at prop firms, I'm probably gonna have to go look at a few prop firms and check what their like passing limit is. Do it in paper trading, and then I think once we do it in paper trading, I will pick one of the prop firms and open up account there and then just recreate this whole scenario, just so people can see like, okay, like see, let me like, it translates from demo to prop firm or / real account trading, and for them to understand like this is what it looks like. Like I see some live stream. I've been kind of looking at more live streamers on YouTube, and like they might be like trading with they'll be like, oh, like $6,000 in like 10 minutes, and that's fun, and that's like kind of like, you know, it hits the dopamine and like it gets your like adrenaline pumping, and it's like, oh, like I can do that eventually. But I kind of wanted to make this a channel something that is more realistic looking, and something that people who aren't consistent yet or are like right on that edge of like their break-even traders are like about to be consistent. Like I want something realistic for people to understand that like they just have to do this. Like, because when you see those like $6,000, like I said, I could have put like 5-10 contracts on here, and then that would have been like awesome, and like kind of like your adrenaline's pumping, like, oh, I can make that eventually. But I want people to understand like this is what it looks like. It's also super boring. It's like very monotonous. Like there are, especially on the days, so like this was like a little nerve-wracking, but it gets your heart rate up. But on the days where the liquidity isn't a high resistance liquidity run, and it's like we close above this, we come down, tap it, and then we just run to our buy side. When those days come, this is something it was actually kind of shocking, and I think really insightful for me to learn, is when you actually do get like the 20 to 30 handle runs in like a few minutes, it's boring. Like it's crazy to see how like your heart rate gets up in this situation. But if it was to just be way more obvious, like you're clearly on sides, you know it's going to happen, your heart rate isn't going up. And once you start to get like do that a few times, it actually does get really boring. And that's why like you hear like ICT himself is like, it should be boring. Like you should do it so many times that it's boring and monotonous. And it's crazy because when it does get boring and monotonous, especially, I mean, I'm paper trading here, so it's not even real money, but it is a little, especially when you're like paper trading, and I'm doing this, you know, for you guys just to get a more realistic understanding of what it looks like to get base hits and what it looks like to, you know, pay your bills with trading. And like the people, because I feel like most people who are watching live streamers are still trying to learn or still trying to figure out how to become profitable themselves. I don't know why you would, I don't know, that maybe this is just a me thing. Like I didn't watch live streamers when I was like profitable. I wasn't watching other people trade. I was focusing on my own trades. But yeah, so thanks for listening to my soapbox ramble. It looks like we hit our objective for the day. So I don't think I'm going to just let price do whatever it wants going into the close. I appreciate you guys for sticking with me. If you could just leave a I can't believe I'm saying this. If you guys could leave a comment on this video, that would really help. I've noticed anytime there's a comment on the videos, that video just seems to get like way more views. So I guess the YouTube algorithm likes that. I'd appreciate that a lot. Any kind of feedback would be great. Enjoy the rest of your day. I will be on tomorrow.